AI stocks are on fire again, and Nvidia is leading the charge. After another blockbuster earnings report and a new chip announcement, the NASDAQ has just hit an all-time high. So what's driving this latest surge in tech, and is it sustainable? Let's break it down. Let's start with Nvidia. The chip giant reported Q2 earnings that below past Wall Street against estimate again. Revenue hit $28.6 billion, up over 70% year-over-year, driven almost entirely by demand for its AI-focused GPU. Earnings chart: CEO Jensen Huang speaking at conference close-ups of chips. CEO Jensen Huang announced that demand for the new Blackwell B200 series, Nvidia's most powerful AI chip to date, has outpaced supply for the fourth straight quarter. These chips power everything from large language models to an autonomous robotics. Profit margins are also up thanks to strong enterprise order from cloud providers like Microsoft Azure, Amazon Web Service, and Google Cloud. But it's not just Nvidia. The entire AI sector is surging. Companies like AMD, Broadcom, Palantir, and even newer players like Cerebras and Grabcore have been stock giants of 10% to 25% over the past week. Stock tickers: AI conference footage, CEO giving downs. Much of the growth is being driven by explosive demand for AI infrastructure, from data centers to edge computing, as more business adopt generative AI tools. And it's spreading. Meta just announced it is increasing its 2025 AI infrastructure spend by $12 billion, while Tesla unveiled a new AI training cluster for its self-driving program. With tech stocks surging, the NASDAQ Composite has officially hit a new all-time high, crossing 18,500 points for the first time. Traders on the floor, NASDAQ building line starts animation. Investors are bullish on AI long-term potential, and analysts say that we could be in the early stage of a second AI supercycle. Tech now accounts for over 42% of the S&P 500 market cap, and Nvidia alone is valued at over $3.6 trillion, making it the second most valuable company in the world, just behind Apple. Wall Street analysts are mostly optimistic. Goldman Sachs upgraded Nvidia to a strong buy, and while Morgan Stanley released its 12-month price target to $1,350. But some are warning of AI over exuberance, pointing to high valuations and dependence on a handful of key players. These are also concerned over regulatory pressure, especially from the EU and China, where export controls and data privacy laws could impact growth. Analyst interviews, clips of Capitol Hill hearings, global tech summits. Still, Nvidia and its peers continue to evolve fast. Rumors are already swirling about Nvidia's Project Helios, a next-generation chip platforms aimed in a real-time AI interfaces with drastically reduced in energy consumption. Whether this rally has legs or not, one thing is clear: AI is no longer a future trend, it's driving the markets today. Nvidia is the center of this transformation, and the tech world is watching every move. Stay tuned for more updates on the AI economy, tech innovation, and market trends. Be sure to like, subscribe, and hit the bell icon for our next deep dive.